Well, absolutely no surprises in the monetary policy review this time. I think everyone was expecting the Reserve Bank to hold rates. So the repo rate remains at where it is 6.5% and the cash reserve ratio at 4%. So given the uptick in inflation, the numbers which the RBI has put out for April, which it says is worrisome, and the fact that there are other developments, both internal and external, I think no surprise that the rates would have been kept where it is. So one of the worries, of course, was the fact that the inflation is slowly inching up. The RBI's own survey of which it does on inflation survey or inflation expectations among households show a higher chances of expectation of inflation. Apart from that, services inflation is inching up a little, and there are developments which they would want to keep looking at. One is what's happened overseas, which is the Brexit exit in UK, where if that happens, there could be volatility in the international markets. So they want to keep a watch on that. Apart from that, the US Fed rates, in fact, where the US Fed rates committee, the decision on that, which will also have a huge impact not only on India and other markets, but that doesn't seem to be as much of a worry as it's now. Yet they would want to keep a watch on that. And the fact that in August, September, we have the redemption of foreign currency deposits. So those are the worries. So keeping all that, effectively, the takeaway from all this is that the chances of a rate cut are virtually nil over the next quarter or two. In fact, actually, that really is one of the key takeaways. And the other takeaway would be the fact that the RBI would rather concentrate on ensuring that there is, as they call, transmission of the rate cut. The Reserve Bank of India has cut rates by 150 basis points so far, but in reality, it's translated only into 75 basis points or less than that from banks. So they would want banks to do that over the next quarter or two. Those are the key takeaways rather than anything else.